Friday, December 31st, 2021, Maneco 64, home of alternative economics and contrarian views. Even though I try to take every day, one day at a time, try not to get too bogged down with 5-year plans like communists and socialists or central planners. Yes, of course you have to have some kind of idea where you're going, but to me, yes, it's going to be a new year tomorrow, 2022, but not much will change. Nevertheless, I wish you all a happy and prosperous new year. What am I looking to do? What are my strategies for the new year? Well, they're not going to change. And as I've said in the last few years that I've been doing my videos, or 5 or 6 years, yeah, I'm going to try to keep self-reliant, live within my means. Yes, try to keep stacking, try to ignore television. Well, we haven't had a television really. That's a television, but we don't watch television. That's just for other things. For 6 years, ignore the television, try to ignore the mainstream media as much as possible. We're seeing that a lot of things that were conspiracy theories in the last few years are actually now being reported as true in the mainstream media. And here I'm thinking of what happened in New York with Ghislaine Maxwell. And it looks like a lot of people, important people, I think the judge said that princes and presidents, and I would add maybe prime ministers, should be worried. So that's a good thing, that conspiracy theories are becoming reality. While they're the truth, I would say. It was the CIA who came out with that term in the 60s to try to stop revisions of what happened on November 22nd, 1963 to JFK. So, yeah, to discredit people who questioned the official narrative. But apart from that, yes, I wish you all a happy new year. Today we're going to talk about Wall Street and Main Street in the UK. You could say the city and the high street, and a tale of two cities. Just the huge disparity between the two. So on Main Street or on the high street, for the average person this year and next year, we're going to be worrying about higher taxes, higher energy bills, higher food prices. We won't be able to do what we like doing as normal, like traveling once in a while with our family, seeing family in other parts of the world. If you have people, family that live abroad, you won't be able to do that, especially if you're not going along with all this hype, delusion, and hysteria about a disease. And then you have on the other side, you have the billionaires. Apparently, I think their fortune went up by 400 billion in 2021. You have, and I'm not against people doing well, but I'm just, and good luck to them. The problem is that the system is screwed up, and it's favoring a minute amount of people and hurting the vast majority of the public. And that system, of course, is a system of fiat currency and legal tender laws, central banking, monopoly system. It's a system that extracts wealth from the public through the national debt and taxation that backs this crappy fiat currency for the benefit of a few people at the top. And the story that's really caught my attention, it came out, let's see, yesterday in the Financial Times. And it's about how deal making surges past $5.8 trillion to highest levels on record. Private equity and SPACs fuel mergers and acquisition activity as investment banking fees hit $157 billion. So, of course, that would never have happened if we hadn't had the inflation that the central banks have created. And some people still think there's deflation. They must be mad or deluded, or they must have their heads in the sand. So 157 billion in fees. Wow, that's revenues, right? And it's interesting how Wall Street and the city, when they make these huge profits, there's no talk about, oh, this is inflationary. We need to tax excess profits. And by the way, I'm not for taxation. I'm for small government. I'm for free markets. And yes, but be as it may, on the other side of the coin, we're seeing companies like energy companies now being threatened, and commodity companies, just because they're making more money because the system is inflated, the money supply. Of course, commodity prices are going to go up, energy prices are going to go up. So there's talk here in the UK, for example, ministers considering windfall tax on firms profiting from gas prices. But do you hear any stories about ministers considering windfall tax on Wall Street and the City of London for 157 billion in revenues, windfall revenues from this massive inflation by the central banks and the governments? As Felix Sommeray once said, inflation against government is impossible because it's government that creates the inflation. And how do they do that? Well, they've spent futurity, if you want to use that word. They've spent about 20% of GDP in 2020, and it's going to be the same in 2021 and 2022. They're spending, and how do they do that? Well, they borrow from the future, and the central banks oblige. They do the QE to help keep those loans cheap, and the bankers leverage on the back of that. They pay nothing for those reserves that come from the central banking system. And yes, you get this massive bubble in deal making. And usually for things to crash, they have to go massively higher. So you can't crash if you're standing. You can't drop off a precipice if you're standing away from the precipice. You've got to be high up. That's what I mean. So this is interesting. It just goes to show that there's two rules for the big corporations, for big finance, and the general public. And yes, so let's quickly go through this. It says global mergers and acquisitions for 2021 have soared to their highest levels since records began more than 4 decades ago, thanks in part to booming markets and widespread stimulus measures. Well, I would say it's thanks to massive inflation, but of course the FT is not going to say that. Booming markets, why are the markets booming? Well, because the Fed is providing, and other central banks are providing massive liquidity through money printing. So yes, QE, again, I'm going to state it again, QE is not deflationary. QE is inflationary. It creates money. You might want to call it reserves. So let's continue here then. Deals worth more than 5.8 trillion were agreed worldwide this year, according to figures from Refinitiv, a 64% rise from last year and the fastest pace of growth since the mid-1990s. The value of deals was 54% higher than in 2019 before the pandemic. It marks out 2021 as an exceptionally busy year, even for an industry that has been accelerating for much of the past decade. In 2021, the stars aligned and virtually everything that could go right for deal making did, said Frank Aquila, head of M&A at law firm Sullivan and Cromwell. The M&A boom also contributed to record-breaking fees for investment banks in 2021. Those totaled $157 billion, including $47 billion in fees for M&A advice, the most since records began more than 2 decades ago. Central bank crisis interventions to cut interest rates, combined with widespread government support for companies hit by the pandemic, have buoyed stock markets, boosted growth, and provided easy access to cheap debt for deals. So you might be saying, wow, you're being negative. Well, the thing is, there's no such thing as a free lunch. Mr. Aquila said the stars aligned. No, the stars didn't align, Mr. Aquila. The central banks and the governments aligned to rob futurity, as I said again. And that's why we're getting the rising cost of living. And for those who think that the rising cost of living is going to moderate and come down at a lower rate, dream on. Because this is going to be paid for, these trillions that have been created out of thin air, these massive fees. So the investment banks are getting these fees, they're spending that money, they're driving up asset prices even more, they're even driving consumer prices. But we will be paying, our children and grandchildren and their children will be paying for this through higher taxes, a collapsing or debasement of the currency, or you want to call that inflation. Of course, there is one hope that all of this circus, fiasco, this massive scam collapses on itself, and that is possible. So just to give you an example how crazy things are, back in the dot-com bubble of the mid to late 90s, early 2000s, you can see by this chart how M&A really boomed, and then it dropped like massively in the recession of the early 2000s, and then it picked up again. Just how it's picking up again now towards the 08 crisis, and then we saw another drop. This is off the charts, as you can see. Not a good sign in terms of the health of the financial system, I think. It shows me red flags. It's a canary in the coal mine. So with that, let's quickly look at where the markets are this morning. Here in London, on New Year's Eve, December 31st, usually the markets trade for half a day. I think it's the same in New York. So it's going to be a little quieter today. So we've got, what time is it? 8:45 a.m. London. We've got spot gold at $18.18. It's up about $3.50. Range has been $18.20 to $18.11.50. Silver is up about 10 cents, 0.5% at $23.12. Range has been $22.95 to $23.19. The Dow futures down 16 points. NASDAQ is down 4. S&P future down 2.5. The FTSE 100 index is down 30 at 73.75. To the currencies, sterling is up 0.1%, 135.14. The euro is unchanged, 113.14. The dollar is unchanged versus the yen at 115.12. Dollar's down quite a bit actually versus the yuan. Dollar's down over 0.25% versus the Chinese yuan at 635.80. Aussie dollar up 0.2%, 72.67. The dollar is unchanged versus the Canadian dollar, 127.31, and the Kiwi dollar is unchanged as well at 68.35. To the commodities, WTI crude is down slightly at 76.56. High-grade copper is up 0.75% at 4.42. And to finish off, the 10-year yield is unchanged at 1.52%. It's down a couple of basis points from yesterday morning when I made my video. And yeah, just to let you know, tomorrow, Saturday, the 1st of January, I will be posting the Mike and Mario show that I usually do with Rethinking the Dollar. And then on Sunday is just going to be, as usual, normal. I'll be doing my Sunday live stream. So if you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Rumble, Twitter, Facebook, and all these other platforms below here. I wish you all a great day. Take care. Bye.